I wanted to discuss the market today and the possibility that we are entering into a bearish market. This is something I've been following for quite a bit, and my prediction was that we were going to enter this bear market on Monday, last Monday, and to try to take advantage of that, I did try to buy some leveraged, inverse leveraged ETFs, some energy leveraged ETNs, and then also a drone manufacturer to try to take advantage of this. But as a technical analyst, I thought that we were really in this sort of long, prolonged flag type pattern where the market was slowly kind of drifting up. Didn't really seem like there was really much volume going on, and it was slowly just drifting up in a weird way that kind of signifies a reversal. And I think we have this sort of flag pattern type reversal. So I think really the main concern now is, though, beyond what the market's doing, is the possibility of what's called stagflation. Generally speaking, inflation and unemployment are going to be actually inversely related, and there's a concept called the Phillips curve that really illustrates that. Now, in the 80s, which kind of reminds me of today, we had an issue of a gas crisis, and that caused persistently high in inflation, and then we still had high unemployment. So basically, with the new the new Fed chair coming in, Jerome Powell is going to be leaving quite soon. Basically, his mandate is going to be to bring down interest rates. And the issue is that as you bring down interest rates, you're going to cause a more inflationary environment. And the problem is we already have an inflationary environment with the price of gas. So that can cause the price of goods to go up, and it may actually be in vain, because usually you want to stimulate the economy by bringing interest rates down, because if the job numbers haven't been so great. We lost 92,000 jobs last month, and that's not counting this month yet. And so far, a lot of the job numbers have been revised down. And, just anecdotally, you do see a lot of companies kind of laying off workers. So when it comes to, so just by bringing down interest rates, that may not be the cause of spurred hiring for companies because of the fact that gas is going to counteract it. When oil prices are high, that causes gas prices to go up, and it causes actually all prices to go up because most things are going to be shipped. A lot of the plastics, fertilizer are made with petroleum type products. So that we could have an issue where even if interest rates were to be cut, we would actually create a situation where now we have a high inflationary environment and high unemployment, and when the Treasury Secretary might be forced to basically raise interest rates to try to counteract that inflation. So usually what the Fed chairs will do, the Federal Reserve will do, is they will try to raise interest rates beyond inflation in order to bring inflation down. But that causes economic pain. So either way, we'll see how it pans out. I do think that we are entering a bear market, so we'll see if this is going to be a full-on recession, which means 2 quarters negative GDP growth. We'll see if it's a temporary dip in the market. Either way, definitely a very interesting time to analyze the market and see what happens and see the various reactions. It also feels like we're in a very jumpy time too, where events can just cause like big spikes. Just even words from certain political leaders can cause spikes. So I think we're in a really jumpy environment. And if you look, we have historically all-time high people sitting in money markets, which could be because people want to sit on the sidelines and see how things pan out, right? Also, it could be the fact that, rates are higher for money markets. I mean, in the past, they were almost like near zero, not too long ago. So we'll see what happens there on the money market front. I mean, also, the ETF USO has a lot of people piling in, and there's an insane amount of buying. So we'll see if that will materialize. So please like and subscribe for more, and enjoy the rest of your day.